You're listening to UCW Radio. In your face.
What we got here is a failure to communicate.
Oh, have I got your attention now?
For lack of a better word, it's good.
You know what I mean?
Money to be made in a place like this.
Money never sleeps, pal.
You're crazy.
You know what it takes to sell real estate?
It takes brass.
I'm falling, and I can't get up.
All right, welcome to Money Never Sleeps, the show where we talk about anything and anything that impacts the flow of money from around the corner to around the world. And it's been a crazy few weeks, as you've noticed, if you've been, tracking the market, in the commodity market, stock market, equities, bonds, whatever you pick your poison. It's been a roller coaster ride. Oil markets, most interesting thing. History, you're talking about negative prices. It's never happened. If it was going to happen, I figured maybe a point or two, not 10, 20, 30, $40. So but it was just it's the oil markets and what's happening. It's more than just a commodity situation. It's not even a supply and demand issue. It's become something more than that. It's so intertwined with everything that's going on, but then it's kind of detached, but it's kind of attached, and it's just wild. You have oil being imported, but meanwhile, you have oil that's here that can't go where it needs to go, because the pipelines are clogged. They're filled up. You have storage, at that capacity. So, we'll see what happens. I said on the last show that, in my opinion, is not something that's going to last forever. Part of the problem is what's been happening with the COVID-19 pandemic. People aren't driving anywhere. They're not jumping on planes. So you have airlines that have their planes grounded. You have people that have their cars parked. They're not really going anywhere. Things are, in the U.S., you have things that are going to be opening up in Georgia, Florida, other states that are going to start opening up on Friday, and that's going to continue. So let's see how that works out. I think that things need to open. When you have Macy's going out looking to raise $5 billion in a debt offering to avoid, going into bankruptcy, that's a big thing. Okay, you have restaurants, the bigger restaurants that, they're hurting too. You have some restaurants that are doing better than others. They have the takeout delivery and everything. The small restaurants, the single or two location deals, they're getting slaughtered right now. They're not getting the help that they need. You have workers that are going out there and starting campaigns, GoFundMe and this and that, because they're not getting the help. There was one bar in somewhere in I think in Fort Lauderdale in Florida that the owner of this establishment, it's been around for I guess a couple of decades, and they would put dollar bills on the wall, and over time it accumulated. So they went and took all the dollar bills off the wall, and they donated it to their workers so that they can, have money in their pocket. And that was about 10 grand of dollar bills that was on the wall. So that was interesting, but everything will change. Once they start opening things up, things will evolve. Granted, a lot of, you're going to have a lot of companies that won't be able to come back. The longer this goes, the harder it is for them to come back. You have, and it's interesting that they're opening up gyms and other entertainment areas, movie theaters, and so on and so forth, first and foremost, above, other establishments. They have to have their protocols in place, especially with a movie theater. Having people sitting side by side is dangerous, especially, there's really no, even though the coronavirus is flattening a bit, the curve is flattening a bit, you can easily spark things and make it, spike back up. It's not over yet. And people think that, I'm okay because I don't have it. Well, you go into an environment like that, your chances are greater than not that you could get it. And it's not, you get it, it does impact your lungs, that I do know. Whether you have it severely or not, you do, some lung damage does happen, and that tissue doesn't grow back. I don't think it grows back. I'm pretty sure it doesn't grow back. So we'll see what happens. You have Jacksonville, the beaches opened up, they were packed. What concerns me is no protocols are being put in place. It's just opening things up, which I think is stupid. It's very irresponsible, and it can cause an issue. That I do know. You have companies like LabCorp and other companies that the FDA fast-tracked them to approve their testing, the coronavirus testing kit, home testing kit, which is going to allow people to test themselves, and they send it in, and if you have it, you'll know. If you don't, you'll know. But then they'll know, and then the government's going to know, and everyone's going to know. There you go. So that's interesting. But again, with the spike and the public companies that are involved in this space, that's something, people aren't going to be taking these home tests forever. I give, like, the travel industry, tourism, that has gotten slaughtered, which impacts the restaurants, which impacts the employees, which impacts families, and so on and so forth. And it's just a domino effect. People need to realize that you have public officials, you have Congress people that are, it just amazes me that you have some Congress people that just have really huge mouths, and they create such a ruckus because you have a political agenda there as opposed to doing what's right for the people. Okay, you have small businesses that are suffering, and I'm telling you, if Linda McMahon was still at the helm of the SBA, this whole thing would have been done differently. Okay, and it's not. Okay, the deployment of the capital is not, and now they're looking for additional funding, and granted, the hospitals and everything, they need help for sure. Small business needs help, and you have some Congress people in the great state of New York that are looking to ruffle feathers and hold things up. I think that's horrible. Small business needs money now, not in a week or two or in a month. They need it now. They need to take care of their families. They need to take care of their employees. They have to keep their lights on. A lot of things that need to happen. And shame on those politicians that are doing that. Shame on you. Okay, we're all in this together. You see the commercials, you hear the ads, you hear all this stuff that's going on, and we are in this together. To do something like that is just, I don't know, it's just irresponsible as well. All right. Anyway, moving on. I want to talk about the flexible office space market. That's interesting. Okay, you have companies out there that have created a business out of having flexible office spaces. Some buy the buildings, they provide the space. Others buy buildings, they also lease space in other buildings to provide their service, and so on and so forth. There's a problem with that. Okay, because you have, post WeWork, WeWork, the business model was interesting. I think that they could have made it work if it wasn't done the way it was done. That it became, I guess, a selfish situation. When people are looking out for their own interests and not looking out for the company, that becomes a bad deal. Okay, but there are other companies in this space. All right, the ones without a comprehensive plan of action to monetize, they are not only going to shrink in size, they're going to be laying off a lot of people. Okay, and this is also going to do. It's going to have a negative impact on the commercial office real estate market. The owners, such as REITs and individual owners and this is going to impact them, because when you have, when WeWork came on the scene and exploded, they kind of killed the commercial real estate space in certain areas, because they were taking they're taking a lot of space, millions of square feet, in key markets. They were leasing it or buying the buildings and so on and so forth, and they were just dominating. But again, times changed. That has changed. You have other companies in the space. You have let's call it a legacy company in Regus. They've been doing it a long time. They're an old establishment. Their environments they provide are not hip. They're not new. They don't say, hey, you want to be there type of deal. Okay, so it's more, just just a little cold, I guess. So but they'll survive this. They've been doing this a while. But companies like Impact Hub, District Co-work, Industrious, and the new kid on the block, knotel. These companies, they were happy when WeWork hit a brick wall. Okay, they thought they can build a better ship, but at the end of the day, you think you have a better ship, and you're making something a little bit better maybe than the other guy. But if they look back, they look at the model. WeWork had a decent model minus Newman doing what he did. If he didn't do that, the company would be public and thriving, actually, because they had certain components that worked, and they just need to tweak other things. But these other groups, they're just real estate holders. They're leasers, the lessers, and they're re-lessers. They sublease spaces, or they lease them out, and they have the flexible office spaces. So they're kind of that's kind of their business model. Actually, that is their business model. But again, without a plan of action to monetize, they are not going to be able to grow, and actually they're gonna kind of shrink, so they're gonna start reeling it back. And I'm telling you that the spaces they're leasing, they're gonna wind up giving back millions of square feet to the commercial office space owners, and it's going to impact that industry. So watch for that. It's coming. It's coming. Even though, right now, small to mid-sized businesses, they're understanding, and they learned the lesson from the COVID-19 pandemic. They learned that they can change their business model, make it more effective, give their workers a better quality of life, still have growth at the forefront, reduce their overhead, and still have the impact they're looking to have. You have workers that can work remotely that can be as productive and not more productive, because if they're happy and they're able to work remotely and have that type of scenario, it's going to increase their productivity, and they're going to enjoy working with these companies. So you're going to have, some workers, that'll stay longer with the company, longevity, but the small to mid-sized businesses, and learning this lesson, again, this is going to impact the commercial office real estate space, and they're going to start downsizing the space they have. If they own buildings, they're going to try to, do a sale leaseback. I'm sure that's going to happen. I doubt they're going to go and try to finance a building, because that just brings another debt on their balance sheet. If they can reduce, even though you're losing an asset, you're actually reducing your overhead somewhat, because at the end of the day, if you're a company, if you're, for every, dollar you're putting into whatever you're doing, if you're making, 25, 30 cents on it, or 50 cents on it, okay, you take that same money that you have invested in your building and you put it towards your business, you're going to be making decent profits. So the companies aren't going to suffer. They'll be doing better. They'll be growing. They'll be able to hire the people they need to hire. What's gonna get impacted is the commercial real estate market, and that's the way it is. But again, there are solutions for that I'll cover on another show that can, over time give a lifeline to the commercial real estate owners that are out there. Something really interesting that I'll share with you at a later date. Technology companies, and have come to light, and not every technology company. Everyone talks about the Amazon, the Google, the Facebook. Look, Facebook just invested 5.2 or 5.7 billion in Indian India media company. Okay, keyword media company. So did Facebook just become a media company where they said they weren't a media company? I don't know. I guess, we will see. But the technology companies that I'm talking about are the technology companies that are involved in various AI, computer vision, machine learning. These are the companies that will thrive. If you have the opportunity, take a look at the ones that are publicly traded. Better yet, look at the ones that are privately held, okay, and look at these companies. Because if they're involved in artificial intelligence of any sort that has value and growth to it, and if they're crossing that over with other technologies such as blockchain or cybersecurity, that's a win. That's a win across the board, because you're talking about the future, and not only providing security, but you're providing the artificial intelligence, which again is the future. Now, these companies are going to thrive in a big way in the virtual landscape that's ahead of us. We're in the midst right now. It's just going to get bigger and better, stronger, and the growth in that arena, for those that are involved early on, they're going to be very happy that they did get involved early on. Data. Any company out there that's involved in the world of data, and I don't mean about giving data on your phone or internet data. I'm talking about data information. Okay, that data is going to be the new gold, or Bitcoin, if you will. This is going to be the future. And you're asking why? People's information? No, I'm not talking about people's information. I'm talking about data, things. Okay, machine learning and artificial intelligence needs data to learn. Just like you teach a child how to walk, how to talk, how to speak, how to do math and everything else, machine learning is important, and it needs data to function and get better. And this is why, if you have trading systems, you have data that's inputted into, a machine learning environment, and it creates algorithms that work. So that's something you want to look at. Companies that have big data, okay, they're gonna. It's a win. In these two industries, it's a win. They just win. They just win across the board, and the people that are involved win. Period. The end. Okay. There are going to be a lot of things going on over the next couple of weeks, which should be interesting. And I'll be with you, and I'll bring other topics to the table, talk about other companies. Over time, I'll start bringing on guests so we can share, some views on different arenas. A lot of things that we're going to do on Money Never Sleeps. So just bear with us as we put everything into development. All right, and that's about it for this episode. So wish you guys to be safe. I want you guys to be safe out there, and if you're trading, have a great trading day. If you're investing, just be aware of what you're investing in, and again, look at companies, and especially not only public companies, because equity can be rich right now. You have debt holders that are actually going, and they're As far as on the capital stack, you have the debt holders that are on top, and if equity gets too rich, they give crazy valuations to companies. So if you have the opportunity to look at private companies, if you are an accredited investor or an institution, I would take a look at private companies in AI, machine learning, as long as it's crossing over with blockchain and cybersecurity. Again, it's a win across the board. And big data companies, you got to take a look at that, because the revenues is going to flow for them as AI increases. All right, on that note, I'm done. You guys have a fantastic day, and I'll be with you on the next episode of Money Never Sleeps.
Initiating shutdown sequence.
You're listening to UCW Radio, in your face.
What is your major malfunction?
So let it be written. So let it be done.
Ladies and gentlemen, my mother thanks you, my father thanks you, my sister thanks you, and I thank you.
All opinions expressed by Louis Velazquez on the Money Never Sleeps radio show and its website are solely his opinions and do not reflect the opinions of the UCW radio show or their parent company or affiliates, and may have been previously disseminated by him on television, radio, internet, or another medium. You should not treat any opinion expressed by him as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of his opinion. His opinions are based upon information he considers to be reliable, but neither the UCW radio show nor its affiliates, parent companies, and or subsidiaries warrant its completeness or accuracy, and it should not be relied upon as such. The UCW radio show, Louis Velazquez, its affiliates, parent companies, and or subsidiaries are not under any obligation to update or correct any information provided on the radio show or on the website. His statements and opinions are subject to change without notice. No part of his compensation from the UCW radio show is related to the specific opinions he expresses. Please read the full disclaimer on MoneyNeverSleepsRadio.com.